Both of these two are inspiring individuals. Peter Vanacker, CEO of Neste, and Catherine Howarth, CEO of Share Action. So let me start with you, Peter. You are leading the biggest company in Finland. It started as the Finnish oil company. Could you just take us through briefly the transformation journey from that to where you are now, which is a leader in renewables, both in diesel and in aviation fuel, but also in chemicals and polymers, and where are you going with this? So how has that transformation happened, please?
Thanks, Louise, and thanks for inviting me to participate. Here. It's really a pleasure. Talking a little bit about our company, Neste. Not a lot of you probably know this company, but it was created about a bit more than 70 years ago to give Finland some independency on oil-based products, gasoline, diesel, jet fuels, etc., etc. But we have transformed to be today the world leader in terms of renewable hydrocarbons. These are hydrocarbons that are made out of wastes. We make, for example, renewable diesel. We make sustainable aviation fuel. And we make the precursors, so the basic components that you need to produce polymers and chemicals out of it. 14 years ago, the company then said, okay, let's embark on the journey. How can we make our products more sustainable? But originally, it came out of our people that developed, let's say, the pathways, the technology to produce these products based upon waste and residues. And clearly, it was not easy. Yeah, the investors didn't understand it. Lots of people left the company because they didn't recognize the company anymore. But there was stamina, endurance, passion. There was a purpose that was created, leaving a healthier planet for our children. Over time, 3 years ago, we changed that in creating a healthier planet for our children. And that's where we are today. And in the meantime, our market capitalization has gone up tenfold to more than 40 billion euros. And as I said, we are a global leader and continue to focus quite a lot of additional solutions that help, for example, to create lesser greenhouse gas emissions.
Thank you. Catherine, I work with several banks, and I know that one of the things that make them move is when Share Action has called a meeting with them or put focus on them. But I'd love to hear your thoughts, because this sort of shareholder activism seems to have been up in the last month. People are saying this is the watershed. I'd love to hear a little bit about what you do, but also what does 2021 look like for you? Are we there yet?
2021's company annual general meeting season has certainly had some really fun action that's caught the headlines, and that helps because we need to really popularize and get the message out that the decisions that are made often very quietly and without anyone looking every single AGM season really matter, and the signals that are being sent by investors really count. There's a bit of tough love being shown which is more than necessary from investors. But I think what we've seen this season is actually the fruits of quite a lot of years of building up. And the pandemic has helped to accelerate, I think, all of these trends in ESG, and policy change is driving it as well. And then, the kind of role played by my organization, which is to try and make visible which investors are doing their bit and which investors are just sort of asleep on the sidelines, and really create some positive competition within the investment industry to step up on sustainability. Day-to-day bank financing decisions are so critical to whether innovators in the corporate community are getting the finance they need to transition. And equally well, the withdrawal or the making bank financing conditional on sustainability performance is a fantastic incentive for business leaders to make the move we need.
Thank you. Decarbonisation will often call on leaders not to just make win-win decisions like energy efficiency and cost savings together, but also win-lose decisions like paying more for green premium, etc. How do you think that we can lean into more of that discomfort of win-lose? What's going to make us acknowledge we have to to make some tough calls at times.
What we need to do is reuse the carbon, the good carbon that we have, again and again and again. It starts, I mean, with consumer behavior, of course, and one needs to consider, of course, I mean, they call it, I mean, in business terms, I mean, the total cost of ownership. Yeah, and unfortunately, I mean, these days, if we are looking, for example, at oil-based products, I mean, we're not looking at the total cost of ownership. We're only seeing a fraction of that. So if we really go to a society which is a circular society, then of course, I mean, looking at the entire life cycle, we will get more transparency, of course, on the total cost of ownership, and then it will be obvious, I mean, for every one of us, that these are the right solutions, I mean, and the right choices to make.
I think it's a good perspective. And actually, Catherine, one of the things we haven't talked about in our prep call or just now is, do you look at circular solutions differently?
If we only focus on the easy pickings and the quick wins, it's probably not going to take us to the 1.5 degrees of global warming. We have to be more ambitious, and that does require time horizons which are not intuitive for players in capital markets. And it's very much what motivates Share Action is to try and make investors think long term. And the biggest investors in the markets are pension savers who have really long horizons, but then their money is in the hands of people who have very, very short-term incentives and who get a bonus at the end of the year if they outperform against an index. So there's actually a really big problem, which is that the real end investors are actually totally incentivized to take the long-term perspective where we get the big win-wins, but where we might have some short-term cost. But a lot of the agents in the system in financial markets aren't looking at it that way. So these are really tricky systemic challenges. Greenwashing is a big challenge, but it's also quite easy, I think, if you look carefully, to get under the surface of it. And so what you're looking for are credible business leaders who seem to truly believe and understand what they're trying to deliver. It does help, and it's very important that we have standardized sustainability reporting, and there's obviously a lot of work going on around that at an EU level to try and bring that about. And those quantitative metrics really count. But I actually think this is why shareholder engagement and dialogue with companies is so valuable, because there's a lot of qualitative information out there if you just listen in. And so I'm kind of not entirely sympathetic to the idea that it's difficult to tell. It's a bit of hard work maybe to get beneath it. And there is a problem, which is that companies are, certainly particularly some of the really big ones, have decks of people whose job it is to write really enticing sustainability reports, some of which are only thinly connected to what's going on. So there is challenge, but equally well, there's also a big opportunity, I think, for business leaders that can craft the story in a credible way and take people with them, because there's huge weight of interest in sustainable investing now. So if you've got a credible story, why wouldn't you attract capital? And I'm delighted to hear that Peter's firm is now the biggest capitalized company in Finland off the back of their success.
I hear a lot then from these investors when we are talking about our strategy and what we're doing and the progress that we have made in the implementation, that they are then saying, oh, congratulations. I mean, they start actually a meeting with congratulations. This is great. I mean, progress that you have made. And we're in this, I mean, for the next 5 years, at least. Yeah. So we're not waiting. I mean, and of course, I mean, you have quarterly results and from time to time they go up and they go down. Yeah. And you have a pandemic and so on. But the 90% of the questions that I'm getting in the discussion is around the strategic positioning and the hurdles that we have in implementation of our strategy. And regulation, of course, which is an important part of it.
Failing to innovate at this point is really catastrophic, but we're likely to be quite catastrophic for certain companies and indeed the investors in them. But there's a lot of herd mentality in the capital markets, and that's been a break on sustainability for a long time. But I think we're maybe reaching a bit of a tipping point in a good way, where the herd might really start chasing this, which again is partly driven by regulatory dynamics in the background.
Every company that has the reason of being there and want to be successful will, of course, I mean, also look at not standing still. Yeah, is my opinion. I mean, you will, I mean, focus on innovation as the core that you have capability in your organization. That's not just limited, to an R&D organization. We clearly say, look, we're investing now X millions more in innovation. And yes, you will see, that will impact our fixed costs if you look at the quarterly results. But at least, they have a reason why we are doing it. It's again, coming back to, if you just say, look, or if you lead it up to the investor or the analyst, to look at the numbers and then say, oh gosh, your fixed costs are going up, but they don't know why, then of course you cannot expect, that they would have a buy-in. So it's this willingness, to have this openness and to engage in a dialogue, with the investors and explaining why and what is the timeline and what are the different areas, that we are investing in. If you talk about greenhouse gas emission reduction, there's so much opportunities. Yeah, that actually, if I bring it back to our company, it's more about making the right choices. Yeah, because there are so many opportunities, and if you then have a limited amount of people that you have within the company, it's how to do it. How to find the right cooperations with university, with development centers, and not to overburden, let's say, also your own organization because of so many priorities that you eventually made to have.
Catherine, do you work with regulators? How do you do it? How do you think about them as an actor?
We left all of this very late. We don't have many years to fix the climate crisis. We actually do need to be rather ferocious now in creating incentives, which is obviously one of the things regulation does. So yeah, it's really key. And I kind of actually think we need to consider ourselves in Europe to be innovators in the regulatory space in the same way, in some ways, that corporations have been, in tech anyway, incredibly innovative on the other side of the Atlantic, and hold ourselves up and say we're doing some things brilliantly.
Oil-based products are hardly being regulated. You can take whatever dirt, so to say, yeah. If you compare it to products that are replacing oil-based products, they are extremely narrowly regulated. Yeah, if you take, in our case, what kind of waste and residue can you take to produce your products? This is in the details, and it's actually increasing even the amount of detail what can and what is allowed and what is not allowed. But in the meantime, we have 900 million tons of fossil-based diesel being consumed on the planet every year. 900 million tons. So how are we going to replace that green ocean, or that blue ocean? Let's say that. How are we going to make it a blue ocean? It's a black ocean now. As a front-runner company like our company is, we are always invited, to these discussions. So it's not that we need to knock on the doors of the regulators, but actually they are inviting us and they are bouncing off ideas with us. As a speaker, let's say, for the industry, if I regulate something in this direction, is it actually feasible? Yeah, will the industry be able to follow? Because at the end, otherwise you have an empty regulation and it doesn't bring anything. So that dialogue has improved, over the last 10 years, substantially. And also the target setting, raising the bar is, for us, we're applauding that and we're very vocal about it. That this is extremely positive. Setting the bar high at the beginning, I think, is the right thing to do, but then also being flexible and nimble and honest about it, that maybe, okay, this did not work, perfectly. So, then we do a revision of that policy or that directive in every 12 months or every 24 months. I think that should be allowed if we really want to make a change.
When I look at the work we've done in the banking sector, I'm kind of amazed actually by how much investors asking slightly better questions and coming together to ask them has accelerated the pace of change and action on the climate issue, in particular in the banking sector. And I do think that if there's a sustained period of scrutiny on the chemical sector, and it's only one, there's many other sectors that need it, I think it'll help because, CEOs and chief financial officers, they do tune in when groups of investors start to raise the same questions and are well informed. So I'm quite cheerful actually about the prospects of really constructive investor corporate dialogue that accelerates the pace of change we need.
Thank you both very much for kicking us off with such insights.